and welcome to another episode of Financial Empowerment. Tonight's session is not going to be a very long session. We're going to deal with two topics only today. One of the topics is going to be pre-qualifying or pre-qualification, and the other topic that we are going to discuss is buying a home, a simple 10-point approach to purchasing your first home, whether it is for your family or as an investment. All right, so before I even get started, I would like to open by reading an essay IFA, and the essay IFA is taken from Ugbe Irosun. The essay reads, if we listen to the message of Ifa, we would last like our ancestors lasted. If we would follow the message of Ope, we would grow old like the ancient ones. The carved knife with its sharp edge, these were the pronouncement of Ifa to Oko, the offspring of Iniri, Shanbe of Iritong. The new hoe is used to forge a thick rod. The new hoe is used to forge a thick rod. When the blacksmith wakes up, he is surrounded by elder people. All right, that essay IFA was taken from Ugbe Irosu. All right, and to get into tonight's topic, the first step that one would take, of course, would be to look at the last stream a couple of times so that one would become familiar with the terms of real estate, which we are going to get into today. Now, the first subject we're going to talk about is pre-qualification, the importance of pre-qualifying in relation to purchasing your home. Now, the main reason you would want to approach either the mortgage company, the bank, the credit union, or the financial institution you choose to approach for your home loan or for your home mortgage, you must be prepared to visit them. That's the first thing. The second thing is the reason you want to visit them is because you don't want to just go start looking for homes for all kind of prices that you cannot afford. So to have a realistic grasp on getting that home, the first thing you would need to do is know how much money you would be able to get borrowed in order to be able to purchase the home. Unless, of course, you have all the money sitting in the bank and you could just walk in and utilize it. And even if that's the case, I wouldn't suggest you do. I would suggest you take the loan. All right. Now, again, the most important reason you would want to do the pre-qualification for the loan is so that you would have a realistic idea of what type of home you could either invest in or afford to live with your family. All right. Now, when you go in to any of the agencies, any of the financial agencies, whether it be the mortgage company, the credit union, or the bank for that home loan, they are going to ask you very specific questions. In most instances, one of the most important factors in determining exactly whether or not you are qualified for that loan would be your credit history. So once you sit behind that desk and you're there with the loan, with the person whose job it is to qualify you for that loan, they are going to make an in-depth inquiry into your credit history. All right. After they do that, and this would apply to some countries, I'm not sure if it would apply to Trinidad, but I think in most instances it applies to most countries. The other thing they're going to ask for is a credit report where they could actually look at your credit score. All right, this is a very, very, very important factor in many countries. All right, now beside your credit score, one of the other factors that figures in heavily on your ability to borrow money for purchasing your home is what is called the debt to income ratio. What is the debt to income ratio? Okay, basically, what the financial institution is interested in figuring out is what part of your income is available for you to pay your monthly installment or your monthly payments on the loan or on the mortgage. So figuring out how much you owe and how many persons you have to pay each month is very important to the lender, because they want to ensure that they are able to get their payments each month and every month until the loan is paid off. All right, so your debt to income ratio is actually the amount of money you owe versus the money that you have coming in. All right, the next thing on the list that is very important to the lenders is your employment history. They want to question you very heavily on that. They want to know how long you've been working this job, what position you started off in, where you worked before that, why you left that job. Now, at the end of all of those questions, is really one thing they're really trying to find out. They're trying to find out whether or not you could keep your job so that you could keep paying your monthly loan payment or your mortgage payment. So at the end of the day, all the questions concerning your employment would be to know if you are a steady, stable earner. All right? Next to the issue of employment history, what most lending agencies are concerned with is your income, your overall income. How much money you bringing in on a monthly basis. Or if you're fortnightly employed, if you're being paid every fortnight, they would want to know what your income is every fortnight. And even if you're weekly paid, they would want to know that too. Now again, the reason why they inquire into all these things, including your income, is because they want to make sure that you are a worthy candidate for the loan so that you can be paying your loan every month. All right, the last factor that would be of interest to the lending institutions would be your assets and your liabilities. They're going to want to know, what do you own that you can collateralize, or what you can use as collateral? Meaning, should you fail to pay, do you have something that they can take over or get possession of and sell it or claim it in order to be able to recover the debt that you have in terms of the loan? Okay, so these are the 6 factors that would figure into your pre-qualifying for a loan to purchase your home. And as I've mentioned before, the importance of this is you don't want to just jump out there, go looking for a home, and next thing you choose a home, and when you then go to the financial institution, you realize the amount of money that you qualify for, the home is valued a lot more than that amount. Okay, so then you would have to start over looking all over again to find a house that could suit the loan amount that you qualify for. All right, so pre-approval is the first and most important step in real estate investing and in purchasing your own home. All right, now we're going to get into the selection of a home and the important things that you should consider when you are going to purchase a home, whether it be your first home for ownership or whether it be a property that you are investing in. All right. Now, the very first consideration when you are about to purchase your first home is securing the services of a good real estate broker or a real estate agent. All right. Now, we all know that this is these people's profession. This is what they do. All right. And we know that they do it to make their living. All right. But we must understand that the realtor gets a cut, right, of the sale price of a home, right, which makes some buyers a little bit hesitant, right? Because if you go to a real estate agent and you want to purchase a home, you want to know that that person is going to represent your interests. However, in many instances, the real estate salesperson might also be working on behalf of the seller of the property, right? Remember, you are the buyer and you want to purchase a property. And now you've gone to the real estate agent and you discover that this person is working on behalf of the seller. Now, I don't like the idea of having an agent that works on both sides of the transaction, for the seller and for the buyer. Right? Because I think in most instances, if you're working on behalf of the seller, I think that offers a greater incentive for the salesperson. So really and truly, the salesperson might be more interested in pleasing the seller, particularly if the amount, the commission that they are being paid is greater on the end of doing the sales. All right, so I always suggest, if you're a first-time home buyer and you have to hire someone to represent your interests, you should get a person who works only on the purchase side of the arrangement, meaning someone who represents your interests exclusively. I think that is about the best protection that you could get under the circumstances, just to be safe. All right. Now, the second consideration when purchasing a home that you must keep in mind is that whenever you purchase a home, there are contracts involved. All right. There are many papers to sign, all right, which are actual contracts. And many of them look like standard home buying contracts with no room for negotiation. All right, although that isn't true, right? Because as long as you sit at the table with the seller, until you actually sign, everything is still up for negotiation. As long as you sign off, it's over. You can't negotiate. But as long as you're at that table with the seller and you are interested in buying, before the contracts are signed, you are free to do any negotiation. In some cases, the seller may consider what you're saying and they may go and have the contracts adjusted. right? Either by a real estate lawyer or maybe based on the advice of the real estate salesperson who represents them. They may advise them of the changes that they may need to make, right? If you want more time, maybe even to re-inspect the home or to just to reconsider whether or not you actually want to buy this particular property, you can, at that stage before you sign, you could ask for the time that you need. All right? And then once you come back to the table, then in that case, you don't feel pressure or forced. You might be able to sign all the agreements and sign off on everything and go ahead and purchase the home. All right? Now, the third thing that we want to discuss when it comes to buying a home, especially your first home or your first investment, you do not want to buy a home based only on your immediate need. If you have a family and you're planning to have more children, all right, or if you have a parent that is alive and might be staying with another sibling, and at some point in the future they may come to live with you, you have to consider all the possibilities into the future before you make a decision concerning the type of home you have to purchase. All right? If your kids are away at college and they are to graduate in 2 or 3 years, right? And they will be planning to get married at some future date, depending on how old they are, you have to consider all these things. If you're going to have them live at home with their spouses, you also have to consider these things, right? If you and your wife planning to have 3 more children, you have to consider these things. All right, again, as I mentioned, the seniors in your family, if they are staying with one of your spouse and the arrangement is in 3 years' time or whatever, they're supposed to move in with you, then you must also consider things of that nature. All right? Now, if you're single and you're planning to get married, you may have an idea of how many kids you might want to have, but then when you get married, your wife may want less or she may want more. All right? So you have to think, again, futuristically, and you also have to think about these type of commitment. All right? Now, beside that, we have to also consider too, if you're getting married, right, and you're single at the moment and you're purchasing a house and you are going to get a mortgage or a loan to buy the home, you have to understand that your income currently as a single person may not always be the income of the household. So if you're planning to get married, then you would have another financial contribution coming into your home or into your family. These considerations must be looked at very seriously, especially when you're making financial commitments. If you are going to marry a housewife, a woman who does not work, who would not be bringing an income into the household, right? Then you have to look at the possibility of that being an additional expense, right? And if you marry a housewife and then your housewife decides to have 2 kids without her generating an income, then you also have to consider how that is going to affect your mortgage payments in the next 4 to 5 years, depending on the type of loan that you take. All right. So these are some of the major considerations. The other thing is when you're going to purchase a home, you cannot allow the cosmetics. And let me explain to you by that what I mean. I mean you have to look beyond the paint. A fresh layer of paint could make an old place look really good. you know? So, as much as it might look like your dream home, and it has the room that you always dreamed of having and all these kind of things, you have to try to look beyond the cosmetic appearance of the place, right? You should, I would advise that you try to bring in professional people. When you're going to visit the house, you can carry maybe some contractor or some friend of yours who into building construction and that type of thing with you as an advisor. The owner of the home may not doesn't necessarily have to know that this person is an expert or whatever. You just tell them, well, when I'm coming to view the home, I have a friend coming along with me, and to give me some advice or whatever, or to see if he likes the place or whatever, depending on what you see necessary to say, right? But don't get carried away with the cosmetics. Don't look at the new kitchen cupboards that was installed and all the little fancy trimmings that could cause you to sort of go astray. Try the plumbing. Open a tap. Open the shower head. Open the tap in the shower. Touch the light switch. Flush the toilet. Do little checks that would give you an idea as to how the plumbing is working in the home, how the electrical is working in the home, and things of that nature, right? So try to look beyond the cosmetics. Try to look beyond that fresh layer paint that is in the place. All right. Now, the other thing in buying the home is you may qualify or pre-qualify for a loan or a mortgage. And what you don't want to do is you don't want to buy a home that would max out the amount of the mortgage or the loan that you can get. All right. You will always try to buy a home that you can afford, because you also have to consider that homes require maintenance too. So you wouldn't just have to pay the mortgage or the loan back, right? In some cases, you would have to maintain your property, and if something get damaged, you would have to replace it, and that sort of a thing. All right. Another thing is to, with the pre-qualification and the value of the home and all that sort of a stuff, one of the things we have to consider is that most financial institutions would lend you probably 80% of the value of the home, right? So in keeping that in mind, even though you may qualify for a specific amount, you always want to purchase a home that's probably slightly below the amount you qualified for. I just mentioned some of the reasons, because you want your mortgage, your premium, your monthly payment to not be too high, where should you have any type of little emergencies that you're not going to be able to attend to it on your home. All right. Another thing is, like, for example, right now we in this time where you have things like COVID and all of that taking place. So sometimes you don't always want to take a loan that's going to choke and utilize all of your available income, because you want to be prepared for things that could go wrong, right? Job loss, or not even job loss. Sometimes you might just be moving from one job to another job. So there might be a spell or a period of time when you don't have an income. So you want to have money put aside. You want to have money there, that would allow you to be able to float through any type of little emergencies or situation. All right. Now, as I mentioned before, right? The next advice is don't fix on the purchase price. Right? The purchase price is just one piece of owning a home. Be sure to consider all of the costs associated with your potential new home. I mentioned that just now. Right? That includes the cost of insurance, homeowners association fee, and real estate taxes. Depending on where you live, those can quickly add up. And it's not just home improvement that can cost money. Maintenance costs dollars also. All right, it is a good idea to ask about upkeep for the extra little swimming pool, fancy heating and cooling systems out of the buildings. The suggestion here, they talk about condos and different things, but we wouldn't really get into that, right? They talk, a consideration here would be student loans and debt, right? Here in particular, they mention student loan, right? It reads, following the housing crisis, lending laws tighten. Student debt isn't merely an annoyance, it's treated like real debt, right? Changes. Now, we mentioned before something called the income to debt ratio. All right. So this warning here is telling you that some of the debts you have may not necessarily be stable. So you have to sort of consider variations that may take place in your debts. Your loan, your other loans, you know, may fluctuate. You may be required to pay more. And hopefully, if it's less, it's good. But if you're required to pay more, it could kind of make it difficult for you to keep up with all your regular expenses and still pay the mortgage comfortably. All right. Here they say you don't have to buy a house. There is no rules that say you have to buy a house by the time you're 35 or over. Buying a home is a big decision. While it can be a sound financial investment, it's not for everyone. There's a lot to consider, including the housing market, the interest rate, timing, and your future plans. You might want more flexibility or mobility, or your career and family plans might be in flux. If you're not sure about a neighborhood, consider renting as a test drive. A realtor can help you with regards to that. Well, sometimes you could rent with the option to buy. Sometimes if the seller is flexible, they might be interested. If you ask if you could rent the property for a while to sort of see what the neighborhood is like and how if your family would be well adjusted and all of that, and that sort of a thing. All right. So basically, that's today's show on financial empowerment. We look at the first two steps towards purchasing a home. We spoke about pre-qualification, right? And when we mentioned pre-qualification, we mentioned what the lenders would be interested in. We mentioned your credit history, your credit record, your debt to income ratio, your employment history, your income, and finally, the assets that you own and the liabilities that you owe. All right, so I would like to thank you all for taking in today's stream. All right, this is the second stream that relates to real estate investment. The first stream we dealt with the terms of real estate investment, and today we dealt with pre-qualification and a couple of tips concerning buying your first home. So I want to say thank you, Modupwe, for staying with us and viewing the show. And I would like you to like, to share, and to subscribe. And I would like to say Odabo, see you next time on Financial Empowerment.